afternoon, ladies and gentlemen, and thank you, Bala, for giving this opportunity. It's indeed an honor and privilege. Before I begin, let me begin with congratulations and wish you all the best in your journey. Right? It is a tough thing, and a little bit about my introduction. The last 28 years of my life, the only thing that I have done is sales, right? In different forms, with different clients. So, compared to a lot of promise and a lot of exciting stuff that you saw, you might not see that exciting stuff here, mundane. But the fact is that the only pleasure I derive out of that is that we get the revenue for the company, right, that pays the salaries. So what I'm going to do, and when I was discussing with Bala and some of the things, I modified a bit based on my discussions with some of you. In between working in IBM and selling to enterprise, I also went and ran a small startup that one has since been acquired. So it was a 2.5 journey, very exciting journey. We were in the retail payment space, we were into ATM switching, we were into credit card management, point of sale switching. So the area has a good amount of familiarity to me. Right? And we had to extensively work with a lot of banks even at that point in time. So unless you are an entity that is dealing directly with consumer, if you're not an entity that's directly dealing with consumer, you will have to deal with, whatever word you choose, partner, sell to, as a client or whatever, you would have to work with a financial institution, whether it be bank, whether it is an insurance company, whether it's some other financial, NBFC or any other financial services company. And so I do not want to make this very, difficult or anything, but there are certain realities on the ground when you work with these. And by nature, banks and most of the financial companies are more regulated than most of the other industries. Right? And they are accountable because you're dealing with people's money, right? And we talked about, in between, people were talking about small savings, talking about how do you help, middle income group person, and that's that 50,000 rupees or 1 lakh rupees, their life savings. So somebody has to be responsible from a regulatory point of view, that nobody runs away with that, or nobody does it irresponsibly, let me put it this way. So by the nature of that, what happens when you go to a bank, or let's say you have a product, right, and then you know that product would work very well. So I'm not getting into the product piece of it, or what kind of product would work, but it doesn't matter what that product is, and it is going to work for a financial institution in some form, right? Whether it's going to help them sell more, help them save cost, help them get out to more people, right? Sell more to the same client, or acquire a new client. It doesn't matter. It's in any ways either saving cost and delivering some profits, or increasing revenues and delivering something else, right? But in each one of these situations, as you go along, you will come across, a set of people, a set of processes, and something that you would have to react to when you do that, right? So let's see who are the typically working. Can you just, yeah. So, whether you like it or not, the moment you get to an enterprise sales, you're not selling to an individual. So it's not Chetan Naik buying a book on Amazon or Flipkart or something like that, right? Which the entire decision making is with me. Or it is not my wife buying something that she likes and entire decision making rests with her. So by nature, whether you are a 10 branch bank, or you are a 4,000 branch bank, or you are an SBI 17,000 branch bank, you will have certain roles, you will have a certain responsibility assigned to that role, and anything that goes in, each one of these roles has a function. I've just outlined the key roles that you will typically have to satisfy, whether you directly call on them, or you call on 3 out of 4 of them, and the 4th one is being handled by somebody who's the owner of that transaction, or owner of that relationship, or owner of that partnership. It's going to make that partnership happen for you. Right? You will need to deal with them, and I will also spend a couple of minutes explaining to you why. So the line of business head, that is the individual that owns the profit and loss, that's got the person who's next on the block from revenue growth point of view, right? That's the person who, because he brings in the revenue, he also has a much higher control on the kind of costs, and that's the person who will typically either take the decision to take that business case himself or herself, or will take it up to the CEO or somebody else to get it approved by the ultimate approving authority. And their interest typically is about each one of them has a very different interest in mind. So the line of business, if it's a retail banking head, he has a certain idea and he has a certain problems, and he's looking to solve that problem. That problem could be cross-sell, for example. So, you're a bank and you say, my current ratio is about 1.4 on an average, and I want to get it to about 2.5 relationships. My credit card guy doesn't take a loan from me, and my savings bank guy doesn't take a credit card from me. I want to change that. So I want to sell more to the existing set of customers. That could be a problem. Or it could be acquiring a new set of customers from a certain defined demographics that they're talking about. But eventually it is boiling down to, how am I going to be increasing my revenue, or how am I going to be decreasing my cost? And for that, they typically have a much deeper knowledge and understanding. There's a lot of smart people around there. They have a much deeper knowledge and understanding of how they are there because they were good at it, right? So they have an understanding of what it takes. Sometimes they may be constrained, right, by finances, by the organizational structure, by legacy systems in the organization, by a variety of things. Sometimes they may be constrained because of that, and they may still look at that solution from outside, right? And a buy-in from that individual or that set of individuals is extremely important from a point of view of proceeding, but not enough. So it's all about, I was a student of mathematics. I still continue to practice it. It's not a necessary and sufficient condition. It is a necessary condition, right? However, fintech, technology. You're a bank, you have systems. Right? You will have a system of records, you will have a core banking system, you will have a loan origination system, you will have multiple systems that are already running. So when the bank has all these systems running, you come up with a piece of technology that's really good, and it's going to probably transform the way they interact with their clients, and they like it. But eventually that for the transaction to pass through, it has to go into their systems, right? Which are currently run and managed in a particular fashion. Now, the choice for you is that you have already thought through how it will integrate with that system, if not already created an integration. So some time back, one of the gentlemen who came and asked me about this, and I said, look, you could either do it through going to and approaching a bank directly and saying, I will do this and I will integrate it with your system. There are a lot of standards available on that in any case, right? So if you're into retail payments, there are enough and more ISO standards available, and if you follow that and if you have ports on that, every banking system would have that. So you can connect to that. Or you could go to, there are only 4 core banking vendors in the country. I mean, if you look at the larger scale, I'm not covering the 20,000 cooperative banks who would have some other cooperative things, but if you look at the larger banks, be it private sector or public sector, there are only 4 or 5, 4 predominantly large core banking systems that are omnipresent. And all of them know that they can't work alone, so they have abilities, they have APIs that you can use to interface to their systems. So question is, you go to the technology guy and the first thing he asks you that how are you going to integrate it with my core banking, you don't have an answer. That's the only chance you're going to get, right? So the question is, are you prepared for that? Saying that, yes, I integrate with Infosys Finacle, or I've already tested this out with, FlexCube, or I've already tested this out with, TCS, FNS, whatever, right? So that is at least giving them, because it is their job. The CTO or CIO's job is to ensure that the technology that gets integrated and adopted in the bank runs reliably. Right? That's the role they perform, apart from some of the other things. But that is their primary responsibility. They're the custodians of all the technology systems within the bank, so they need to deliver that. I will come down to this other individual called CISO much later, because this is getting a lot more prominence now than it used to be earlier. Operations, right? You have delivered the system. It has to run. It has to run for a period of time. So if in most banks, the operations is run very differently, and some of you have been in banks. So if the operations person has to run and get things out of that system, there has to be a certain degree of buy-in that it will work over a period of time. It will not add load to them if nobody likes to work harder than what he or she has to. So when you are making that proposition, have you thought through what the operations what would it involve in continuously running that system? And I'll give you an example. I spent about 8 years with one of the first Indian software product startup, and they were just a startup, Ramco Systems, as part of the original team. It was in ERP, it was not in fintech. And we commonly used to joke when we had the product ready that we've got everything ready, but it's like an airplane that will fly from New York to Sydney in 2 hours. We're carrying 3,000 passengers, but it doesn't know how to take off and land, right? Because we had no tools for data migration. So we had everything running beautifully if you are a company starting day one and starting to cut the invoice. But if you're a company with already 20,000 items in your inventory and 17 products and 5,000 SKUs and everything else, how do I take existing thing that you have to do and put it all in my system very fast? If I'm going to take 2 years, the time is gone anyway. So in case your product is something that requires some amount of data interchange and moving back and forth, then how are you handling the data migration? These are typically the questions that get asked even to us, even today, when we go and propose certain products to the client, right? And the fourth individual is the Chief Information Security Officer. The security is becoming increasingly important, increasingly worrisome, and for every new thing that comes there is a crook sitting somewhere there trying to hack into that system, right? And I could go on and on about, we happen to be one of the world's largest cyber security organizations, and the kind of instances that you come across are not trivial. I mean, there are companies that will sell you, they offer SLAs that I will hack into so-and-so site, otherwise your money back, right? So that's the kind of things, and there are things encouraging. So CISO becomes prominent that any interface in any form from over the web, it is coming into the system or going out of the system, there is a necessity. I mean, just give you an example today that in fairly large number of banks, and I'll give you a very trivial example, where would you want to keep your email? In your office servers or keep it outside on a cloud? Give me an answer. What's easy to administer and cheaper? And there are some very large banks where CISO says, cloud over my dead body, it can only be on premise because I do not trust the security of that, and there is bank's email contain so many sensitive information that I won't let it get out. So the business is ready, the CMD is ready, the CIO or the CTO is ready, and the CISO said no. And a bit about somebody said, so mind you, and another thing that happens is be very mindful of sales cycle. When you have to convince so many people, you are not talking about anything less than 26 to 30 weeks. Right? My fastest sale in the last 3 years has been 4 months from start. So question is, do you have that, don't get frustrated is all I would say. Right? It's not because people don't like your product, but it is that they have to go through the different processes. They're doing all of that when they're doing their day job, right? So sometimes it may be a conflict of schedules. Sometimes they may be looking at you and then saying, okay, maybe let me look at a couple of other things. This is very great, but let me open up and see a couple of other things before I come back to this. So there are a variety of these things at play. And because of that, the sales cycle can be as long. I mean, we did an analysis of, across the enterprise. So some data I can share with you, it's relevant to even my competitors. Across the enterprise business, any transaction that is more than 20 lakh rupees, okay, more than 20 lakh rupees. Average closing cycle time from the point we made the first contact with the client, whether it was telephonic or whether it was email or something dropped by, was 23 weeks. And this is an analysis over 10 quarters of data, 5 halves. And this is an analysis of transactions. And we command maybe 12-15% market share in India. We may be the largest company, but which means that we don't contest 2 out of every 8 deals, and we lose 5 before we win 1. right? And somebody else is winning the others. And when we lose, at the same time, the other guy wins. So they also started around the same time and ended around the same time. So the question is, how do you maintain the tempo during that entire period? At what point in time do you communicate what things? So these are reason I'm saying is be mindful. A successful POC is not a guarantee to a contract. I will come a little bit before I come to that piece. Now, typically, I just wanted to list down these concerns, right? Is there a business case? A lot of times, something can be extremely good, right? Extremely appealing. But instantaneously, that individual is not seeing that business case. He's looking at it, okay, my current monthly income on this side is 90 crores. Is it going to get me what, 91 crores over next 1 year? Is it really worth putting the effort? So it's not just the money, it's also the effort. The cost of implementing anything new in an organization. And I'm not scaring you, I'm just telling you, if you're mindful of that, your pitch will be according to that. Is not just the cash or the money that the organization pays out, but it's their people, right? It's the bandwidth, it's the opportunity cost. If they were doing this, instead of that, if they could be doing something else, what they're doing. So all of that gets evaluated when they're trying to put together a business case, right? How does this integrate with my system? The COO will have that question. Go to any bank. You go to Kotak Bank, you go to IndusInd Bank, you go to ICICI, or for that matter, you go to SBI or Union Bank of India or a Yes Bank or any one of them. All of them well-run banks is what I'm talking about. They will have this question because they can't throw away their legacy. They have to run with that. Security, I talked about. Who will manage it? And one of the other very important questions that we used to face, and we faced it until we delivered it to SBI and we integrated 15,000 ATMs handling 5 million transactions a day. Till we delivered an SBI certified, every single customer that I went to when I talked about the startup, every single customer that I went to, oh, you've sold it. But is it working? Oh, I am told that you've sold it, but it's only working with 1,000 ATMs. When you get to 10,000, we will see. And that client has only 500 ATMs with a plan to go to 900 ATMs. And I'm already working on 1,200. Don't be disheartened by that. We finally got the client. But don't be disheartened by that. Point I'm making is that the concern is valid. That, okay, it's working in this environment, but when I'm looking at 2 million transactions, or whatever that number is, 200,000 transactions, will it scale? Because almost every organization that is already existing, just like you have the ambitions to scale, why would they not have that? Whether they are scaling at the speed market them expects them to, whether they're meeting their board of directors' expectations, it's a different issue. But would they have the ambition? Of course, everybody has an ambition. And that comes with it, the scale. How do you handle the scale piece? Please use the people that you work with, the underlying technology providers, for testing it for scale. So I remember what we did at that point in time, that Hewlett-Packard helped us do the benchmarking for 20 million transactions at 3,000 transactions per second, right? When the peak requirement was 1,200 transactions. So it put some money on our side. We had to put some money and effort to get that done, right? But we had that certificate from a completely third party, right, which is not concerned with us, which has done the benchmark, and I had it available. So if there was anybody asking that question, so this benchmark conducted over a 2-day period, it got scaled to that level, and today there are tools available for you to simulate any one of these transactions. And any technology vendor, you come to IBM guys will help you. You come to HP, they will help you. You go to AWS, they will help you create this environment to test it to scale, right? And stability and longevity is about more like is your solution stable? Scale it, when you test it for scale, to some extent you test it for stability. Longevity is all about, these are, the last question more often than not comes from the technology people before they have to accept it. Because they want to know what happens if they have to maintain it themselves. So this is something that I've used it for last 10 years. Never fails to work, right? And why I'm saying is after POC what is because I'm sure you guys would have experienced that you go to the guy, you work through and POC is what POC is, right? I mean, it's a concept, it's not in production, it's tested out at some level, and not every concept gets put to production, right? But how do you take that and move that to something else? And where I'm coming from is that it's extremely important, just 3 questions you need to continuously work on when you're getting your pitch to the bank or to somebody else, and which is, why you? Why not the other guy? Right? So it's whether it's us or whether it's you or whether it's your big company or small company, right? I mean, why IBM? Why can't? When he can go to AWS, he can go to HP, he can go to somebody else, right? Oracle, Accenture, depending on what the situation is, McKinsey. I mean, we operate in so many other areas that we do that. So you have to continuously ask that question to us, why me? Right? Because it may be linked to the product that you have is so unique that somebody else will take at least 6 months to come up to speed and you've got it ready, right? Or it may be, it's something though so well integrated with the other customer systems, can be so well integrated with the other systems that somebody else will take a long time. Eventually everybody will get there. Right? But it's a question of whether you can give them a time edge and you can give them the cost edge. So, why you? And you're going to keep asking that question every time that I go out on a sales call with 500 sales guys that we have in the company. This is the only question I ask. Why us? And sometimes the answer I get is because the last 3 purchases customer did was from us. Who cares? Right? The 4th purchase may not be from you because, you screwed up in the 3rd purchase. You didn't deliver to expectation, or somebody else came up with a price. There's so many reasons why it can't happen. So how are you tightly linked to this? The second and extremely important question is why now? For somebody like me, you live, we are all about tweetum this week, this month, this quarter, right? So everything goes by every Friday, what happened, and then next Friday, what happened, and what are you going to do in the next week, right? Week 1 to week 13, and then where did you end up at week 13? So we tend to look at everything from saying, when will this close, right? When will that individual sign? So what is the compelling event because of which that will happen? The compelling event can be, for example, there is an RBI diktat that everybody must apply this by so and so date, right? So no bank will mess with RBI. So, you will suddenly get everybody so it could be a statute, for example, GST is a classical example, right? 1st of April, 2017, everybody has to, move to the new regime. Now, which means that you will have to make those changes in your system before 1st of April. Whether you started doing it on 31st or whether you started doing it on 31st December, but you will have to get it done by that date. So you have a hard date, which means working backwards. If it is taking 3 months to implement, the client will have to place the order on 31st. So plus minus a few days, you will end up seeing that you are getting this. So it could be ideally if there is a hard date. Sometimes it is difficult to find that hard date, right? Earlier, it used to be that the customers' budgets will expire. A changing behavior, Vani was talking about changing behavior. People don't care about budgets, right? If you've not spent it so far and this quarter is not looking good, let's not spend it. And there goes the budget allocation, right? I mean, and you've gone to the next level. And this happens including in public sector banks. So it's not just restricted to private banks, but it happens including in public sector banks. But there are I gave you an example of a government statute, it's the best case. There are examples they've already launched a campaign about these new products. And they've already announced the date of going live. So they don't have a choice. They will go live on that date, otherwise it's a reputational risk. Right? So they will work backwards and by hook or by crook, they will come and talk to you. So it's a question of how are you asking that question? And the third question is, what's the financial gain? So I'll give a related example, not exactly, but you can apply it to whatever product or service that you are offering. And because this is more often than not a very easily understood example, People buy hardware, right? Even today, not everybody is moved to cloud. So if you're buying $1 million worth of hardware, every single customer will come and question. The CFO will say, why do you need to buy this? Right? But in the old, and no, they don't take this, because hardwares don't fail nowadays. So he says, it's not failing, so what? Let it continue. And everybody always takes a capacity higher than normal. Optimize your software and keep running with the same capacity. So those answers fail with the technology people. So how do you create that justification? You're paying. Beauty about hardware is every new version consumes less power, requires less cooling, right? Typically comes at a lower price and comes at 3-year warranty. So you take the 3-year maintenance of the customer, you take the 3-year cost of power running the old systems, you take the 3-year cost of cooling running the old systems, right? And if the customer is renting out some space somewhere, you take the 3-year cost of rent. You've got a number. If your price is 20% lower than that, no CFO will question that for a 3-year period. If your price is same as that, you don't have a deal. So that's how you try to work your pricing. Your list price is at one place, but you've got to work a pricing, right? So now why this is important is I have also been privy to clients who have actually shared their business case, or I've helped them prepare their business case, that they take it up to their CFOs or board for approval. And these are typically the questions that get asked. I have had situations where everybody, including the CEO, committed on the deal, went to the board, and not a small deal, $20 million, went to the board, and there was only one question from the chairman saying, do we really need to do this now? And we knew that there was no answer because it was a replacement. It was not some new, it was driving them towards cost saving, but it was a replacement for some other service that they were getting from some other people and doing it in-house. And there was no concrete answer, so the whole deal got shifted by 6 months, right? Till they prepared that answer. So my advice to you would be, and as a practitioner, that in your business, just keep asking these questions. You don't get it right the first time. Let me also tell you that. You don't get it right the second time. Sometimes we don't get it right. If we got it right every time, we would have had at least twice the market share that we have. But it gives you, it's like a mirror. It gives you a clarity whether you're barking up the wrong tree. Right? If there is no financial case, the customer, so this is from the eyes of the customer, not from the eyes of the seller, right? Or your company. And whether you are getting into a buyer-seller relationship, whether you're getting into a partnership in the sense that you're saying, I will do some revenue share, I'll operate my piece of the pie, you operate your piece of the pie, but we'll get into a partner, eventually these questions will come up. When do I sign that partnership to kick it off, right? Why do I sign the partnership from this person? So, I thought I'll just put some recommendations for you. How do you go about working? I think when you go to the banks, and if you already don't have direct connects, I would recommend you to leverage make connects with the existing partners and leverage. Now the existing partner could be TCS in some bank, could be IBM in some bank, could be HP somewhere else. But because you are coming from a tech space, I'll qualify this existing integrators for them. People who are doing systems integration work for them, because they tend to trust their integrators. And when you're a small company, and I've been one, so I can tell you this, there are a lot of times these big banks or these big guys tend to not take you seriously. They tend to kind of assume that you're going to close down or get acquired in 1 month, 2 years' time, 3 years' time. And consequently, the way they look at it, it's not that the big companies don't go bust, right? It's not that they don't get merged, acquired, shut down one business. It's not that they don't do it. But somehow a large enterprise tends to think about that about a small enterprise, but doesn't think like that about themselves. That's reality. So if you can leverage that in whatever form of relationship, ideally, if you have in your product, you have an underlying technology that is from one of those people. So if you have something that's working on Oracle, Oracle's a great partner to work with, right? Because it's going to eventually sell more of Oracle. But having said that, SIs or this thing, see how you can leverage them. One of the other important point is be clear on what terms you will do business at. Very heavy price can be paid on this, right? when we were in Ramco and when we started, in the first 3 of us salespeople, 4 technical salespeople, we signed 15 customers in the first 12 months. Okay? Smallest order value was 20 lakhs, the biggest was 2 crores for license plus implementation. But we were competing against the biggies like SAP and BAN and what have you. It's a way back in time. Why I'm saying this, because it keeps hitting back to me how we sold ourselves cheap. So SAP would charge by the user, and we thought our unique selling proposition was, we will give you all you can eat. We realized by the time the client went live, right, we had estimated 20 users, they had 200 users, so we sold it at maybe 90% of the cost. I mean, 10% of the cost. Maybe not 10%, but at least we could have got a lot more had we structured it differently, right? It reached a situation 2 years later that our AMC, which was 22% of the license, was less than it was costing us to service that customer because there were 200 users. So we envisaged maximum 20 users, we'll have this much of people supporting this customer. And now you're 200 users and he's unwilling to pay anything. So it actually came down to threatening the client that I'm walking out. You do what you want. But you have to pay for maintenance at an enhanced rate. So be clear about, I'm just giving you a term, a commercial term, but be very clear about that, be very clear about, because people will negotiate this. As you go along, people will come. When it comes down to signing on the paper, people will want to see the terms, right? Because they need to go back and tell somebody that this is what the terms that I've signed up for. Like I said, value prop, sharpen all the time. While going to the customer, coming back, what didn't we get right? Because this is not a point in time. It's not a snapshot. It's a continuous work in progress till you sign the deal. It's a continuous work in progress till you sign the deal, right? And also important to judge whether you're approaching at the right level. So I spent some time I'll give you an anecdote on this. I spent some time, about 4 years in Switzerland, and I could only speak English. Yes, I picked up some German. I went to classes and stuff like that. I met a friend of mine who had been living there for a long time, and I was going and calling on a customer. This guy said, "You're going to make the presentation?" I said, "Yes." He said, "Does he understand English?" I said, "Yes." "Okay, you're calling at the right level," right? And then he explained to me that only highly educated people in Switzerland and Germany will speak English, which means they're at the right level in that organization. So if the guy is expecting you to speak German, you can safely assume that he's not educated, which means he's not senior enough in his organization. So it's just an example again, probably 10 years back. But how do you decide the right level? Is it the designation, or is it the role that the individual plays in the organization, right? And banks tend to have very, very lofty designation. I mean, in my company, I'm a seller, and the guy who handles the client is a seller. That's how we refer to each other as, right? And in bank, they tend to refer everybody as vice president or more, right? So designations will never give you an idea about where the individual is in the bank. You will have to really work this thing for the account. And sometimes, the last point is, a customer who's delaying your deal is your enemy number one, right? Sometimes you get stuck beyond a level and it's not moving. So you must have a disengagement plan, because it's going to take up your bandwidth. As it is, the bandwidth is limited, right? As it is, you don't have enough salespeople, you're doing a lot of stuff yourself. And then on top of that, if one customer who's not deciding is keeping you occupied for 12 months, just imagine what would happen to your organization. So this is what I just had to share. I mean, I've been through it personally, so I thought I'm getting an opportunity like this, and if you're starting up, I think I did not have the benefit of this when I did that. So I thought I'll just share that with you guys. And once again, wish you all the best, and thank you very much.